USD to Inr forecast for 2022, 2025, and 2030. USDINR is one of the exotic currency pairs that has been gaining popularity in recent years. In this article, the focus will be on the key drivers on the pair's movements. It will provide an apt foundation for the USD to INR forecast for 2022 and beyond. USD to INR price history. USD to INR trading dates back to 1933, when the pair entered the market at the opening price of 7.98 rupees. However, it was not until late that the currency pair rose that past the psychological level of the rupees. Between then and April 2002, it rallied by rupees. It momentarily dropped to 40 rupees in late 2007. Since then, has been on an uptrend, surging by close to 100% to an all-time high of 77.5 rupees at the onset of the coronavirus pandemic in April 2020. With the subsequent pullback, the record high has remained evasive ever since. Nonetheless, it has remained above the resistance turn support zone of 72 rupees. While it is still on the multi-year uptrend, it has primarily been trading between 72 and 76 rupees. Efforts to break the range upper border in December 2021 were unsuccessful. Indian rupees news. USD to INR forecasts for the short of medium term are founded mainly on the efforts by the Federal Reserve and the Reserve Bank of India to deal with inflation. In January, the Fed's hawkish pivot interest rate decisions boosted USD to INR. While it has since pulled back, the currency pair is still above the support zone. Investors will be keen on whether the US Central Bank will begin hiking interest rates in March and by how much. In the meantime, is expected to react to the US non-farm payrolls data scheduled for release on Friday. Analysts expect a significant decline in the job numbers due to the Omicron wave. APD's data released on Wednesday indicate that firms dropped jobs in January. Nonetheless, the market may react subtly to the expected decline in the payrolls as COVID-19 cases subside. Besides, the numbers will likely bounce back as businesses are still looking to hire. Besides, investors keen on USD to INR forecast 2022 and beyond will also be eyeing the RBI interest rate decision scheduled for the coming week. While most economists have been tightening their monetary policies, India is among the few nations that have maintained the accommodative one. In the next weeks, even investors will be looking for a probable reduction in liquidity and other costs on normalizing. Notably, the interest rate decision comes when India has recorded the third wave of coronavirus inflation. Besides, consumer prices surged to 5.6% in January. Will the Indian rupee rise in 2022? The foreign inflows have helped boost the India rupee at the start of 2022. However, as they decline in the coming months, the bank is for the rupee to weaken against the greenback. The inflows are from foreign investors pursuing India equities and the Indian firms issuing dollar bonds. In addition, higher crude oil prices and a strong US dollar are also bearish factors for the USD to INR forecast 2022. A daily chart highlights in ascending channel whose formation began in June 2021. The higher heights and the higher lows are an indication of a broader uptrend based on the fundamental and technical analysis. The USD to INR forecast for 2022 places 2021's high of 76 per 5 rupees at an attainable level. However, it may face resistance at the critical 75.50 rupees in the short term. On the flip side, 74.00 and 73 are possible to support level for the currency pair. What do you expect from RBI? RBI will release its interest rate decision in the coming week. Analysts expect RBI to maintain interest rates at 4% indeed. The rates will likely remain unchanged in the coming months, and the central bank expects inflation to remain within the tight range of 2% and 6%. India's central bank appears to focus on the local economics health without necessarily acting on the pressure from the hawkish tone adopted by other central banks. With foreign exchange reserves worth over 630 billion, RBI is able to insulate the country's economy from the volatility that will likely emerge from the Fed's aggressive tightening of its policy. What to expect from Fed? Similar to other currencies, central bank's policy is one of the key drivers of USDINR indeed. It is one of the factors that an investor should consider for a visible USD to INR forecast. The Federal Reserve hawkish tone further weighed on the India rupee at January meeting as the US dollar rallied. What will be USD to INR in 2025? Long forecast USD to INR forecast 2025 is for a fresh all-time high 79 rupees at the beginning of the year. It expects that currency pair to average at 8 rupees by mid-year before rallying further. USD to INR forecast 2023 and 30. A visible USD to INR forecast for 2030 is informed by the economic health of India and the US, Fed and the RBI's monetary policy, and the demand for the US dollar as a safe haven. Hence, however, as an emerging market, India's currency has potential of strengthening further in the coming years. From that perspective, USD